All right, today we are going to dive into one of the most powerful tools out there for any trader, candlestick charts. It doesn't matter if you're looking at stocks, Forex, or crypto, these little candles are telling a story all the time. You could say they're the language of the market, and in the next few minutes, you're going to learn how to speak it.
Have you ever opened up a trading chart and just felt lost? Like you're staring at a wall of random green and red bars? You are definitely not alone. It can totally look like some kind of secret code. But I promise you, by the end of this, you'll see it as a clear conversation, not a code. And that's really the heart of it. Every single candlestick is like a snapshot of the battle between buyers who want the price to go up and sellers who want it to go down. They literally show you the market's psychology, who's winning, who's losing, and maybe, just maybe, when the tide is about to turn.
So here's our game plan. First, we'll break down a single candle. Then we'll look at the stories that individual candles can tell. After that, we'll get into the exciting stuff, patterns that signal reversals, and patterns that confirm trends are still going strong. And finally, we'll tie it all together with a practical strategy. Sound good? Let's get started.
Okay, first things first. Before we can read the sentences and paragraphs, we have to learn the letters. And in the language of the charts, the letters are the basic parts of one single candlestick.
So, every single candle, no matter what, gives you 4 key pieces of information: the open, the high, the low, and the close price for a specific time period. The thick part is called the body. That shows you where the price opened and where it closed. And those thin lines sticking out? We call those wicks, and they show the absolute highest and lowest prices the market hit during that time. Simple as that.
And the color? Well, that tells the simplest story of all. If a candle is green, it just means the price closed higher than where it opened. The buyers won that round. We call that bullish. If it's red, you guessed it, the price closed lower than where it opened. The sellers won that round. We call that bearish. It's really that straightforward.
Now, let's build on that, because this is where it gets really interesting. Even a single candle, all by itself, can tell you a surprisingly rich story about what the market is feeling. These are like the first words you learn in our new language.
So here are a few of those key words. A doji, that little cross shape, it's basically shouting indecision. It's a tie between the buyers and sellers. But a hammer, with that long wick on the bottom, that tells a fantastic story of prices falling, but then, bam, buyers stepped in and pushed it all the way back up. Each shape gives you a peek into the market's mind.
Okay, now we're going to start combining those words into some really powerful sentences. When you see certain combinations of 2 or 3 candles together, they can be a huge signal that a trend is losing steam and might be about to flip.
The engulfing patterns are just an awesome visual of a power shift. In a bullish engulfing, you see a small, weak red candle, and then it gets completely swallowed up by a huge green one. It's like a visual knockout punch. It shows you the buyers have just totally overwhelmed the sellers. And of course, the bearish engulfing is the exact opposite.
I like to think of the morning star pattern as a little 3-act play. Act 1, a long red candle. The downtrend is in full swing. Act 2, a tiny little candle, maybe a doji. The market pauses, there's indecision. Act 3, a big, strong green candle. The buyers have taken back control and the reversal is on. The evening star tells the exact same story, just in reverse for a potential move down.
But here's the thing, not every pattern is a sign of a massive change. Sometimes the charts are telling us that the story we're already in, the current trend, is still going strong and is probably going to continue. We call these continuation patterns.
The rising 3 is a perfect example. You've got this big green candle, right? The uptrend looks strong. Then you see a few little red candles. You might think, uh-oh, is it over? But they're just a little pause, a little breather for the market. And then, boom, a brand new big green candle appears that closes even higher. This pattern is just confirming that the buyers paused for a second, but now they're ready to keep pushing up.
So, we've got the letters, we've got some words, we even have some full sentences. Now, for the most important part of all, how do you use this new language to make smarter decisions and, just as important, avoid the common traps? This, right here, is probably the most important rule you need to remember. No matter how perfect a pattern looks, it is a clue, not a command. It's about probability, not certainty. The context, where you find that pattern, is absolutely everything.
So how do we find that context? Well, here's a quick checklist. A bullish pattern is way more reliable if the bigger overall trend is already pointing up.
It's even stronger if it happens at a key price level, like a support level where buyers have shown up before. And the cherry on top, a big spike in trading volume. That's the market shouting that it really means it. When you get all three, that's a high-quality signal.
And that leads us right into the big mistakes we all want to avoid. Number one, just like we said, is blindly trusting every pattern you see. Number two is forgetting that this is all about probability. There are zero guarantees in trading. And number three, which is so critical, is ignoring risk management. Even with the best signal in the world, you always need a plan for what to do if the market goes against you.
You know, just like any new language, you're not going to become fluent just by watching this one explainer. Fluency comes from practice, from immersion. So the best thing you can do right now is just open up a chart, any chart, and start looking. See if you can spot the hammers, the engulfing patterns, the dojis. Just start trying to read the little stories they're telling you.
Because these charts aren't just random, confusing lines anymore, right? They are a living, breathing narrative of human psychology, of fear, and of greed. You now have the basic tools to start reading that narrative for yourself. So the only question left is, what story are the charts going to tell you next?